All right, so people are watching content in new ways. How does that change the business model for these companies?
Well, I think what we're seeing is a kind of a shift from traditional, sources of revenues to what I might call the emerging sources, and that includes, new platforms, whether it's online or mobile, video on demand, social media. So this is really what we expect to be a secular shift, and the result is that a lot of media companies are trying to basically follow the audience and try to, shift their revenue base towards these kind of incremental emerging sources of revenues away from the more cyclical advertising.
So you've been very busy this week writing up reports on all of these earnings that have come out. What did you hear from them about their strategy on the earnings calls regarding these changing viewing patterns from their audiences?
Well, I think overall, I have to say that the overall tone has been positive. The one area has been the advertising, kind of weakness across the board, and we've actually seen that from most of the major media companies, with just few exceptions. So, to your question, I think many of these companies are kind of emphasizing, kind of the incremental revenue streams, whether it's kind of retransmission, consent, reverse compensation, digital, as I indicated. So I think those areas are going to be less volatile, and I think because the companies have traditionally relied on advertising, that's why you're seeing the pullback in broadcasting shares, as opposed to maybe companies that are more focused on more stable affiliate fee growth. I think those companies are holding up relatively well. So I think you're seeing some offsetting headwinds from advertising and tailwinds from more stable revenue streams, and that kind of informs a lot of the company strategy.